and immediately pick up mortgage refinancing.
Yeah.
We've been seeing this here, and at large this is happening. Mortgage refinancing surged 35% in 1 week as interest rates hit their lowest level in a year. This is from CNBC, guys. We were at the front row of this when this happened. The 30-year average fixed rate for mortgages went down, and we saw a huge increase of applications that like week to week and also year over year from last year. So let's talk about it. What's going on?
People are paying attention for sure. As soon as they heard the Fed just announce that they're going to reduce the interest rates, the market took effect, right? Even though the rates didn't officially, the Fed didn't reduce the rate, but just because he spoke maybe about it, like, hey, there's a possibility for September. There was a buzz.
Yeah.
People started calling, and we did see the market improve, and it felt really good to actually see lower rates. That something we haven't seen all year.
Yeah,
so it was great.
There's
to
a
see
lot of
that.
carryover from those statements that Jerome Powell made into the market, and then some general jitters when it came to the labor and jobs, and then inflation, and so. But it's kind of like this, like tug of war a little bit too, because there's a little sense that inflation's maybe done, like, accelerating, but at the same time, it's like, well, the data has to prove that. But the market reacted like, oh, we're already going into the fall in a lower rate, latent rate environment than we're in.
Yeah.
And we saw that directly reflect mortgage rates right away.
No, big time. And it was a good relief. It was like a huge, like, okay, we're starting to see the light at the end of the tunnel, right, Brian? I mean, for us, it's just been crazy to see these high rates lasting so long. Because, I mean, you got in the industry
2017,
right?
Man.
I was in 2006 when we got in the industry, and I don't remember seeing the rates this high for such amount of time. Normally it was like maybe 8 months, a year, and then next thing you know, they start going down, and then they went up again, and they go like this time around. This is in my experience and being in this industry, this is the longest I've seen it stay up there.
Yeah, they've been sticking.
It's funny because in 2017, 2018, when I wrote my first note, the rate that I quoted and locked was 5.250. And that was like, whoa, I haven't even seen those in forever. I'm like, well, this is my first loan, so I don't know.
Yeah.
But since then, I mean, right now we're literally at that, that range, depending on where your credit's at, high fives, maybe low sixes. But I think it's just been, a lot of pressure these last couple of weeks that, the 10-year has been coming down. So hopefully that sticks and we can continue to get better pricing. Some other things that I do realize when I talk to consumers or to clients is that whenever they hear, oh, the Fed's dropping the rates, automatically they think that, hey, they're going to come drop 1-2%, but sometimes it's just better pricing, meaning that if you're going to get the lowest of the lowest rate, it's going to be maybe a little bit cheaper than if it was not. And those are something that I think you get confused a little bit.
Well, and people are taking advantage of this in the market. I mean, just from the numbers perspective, quoting the article here, the refinance share of mortgage activity increased to 48% of applications, up from 41 in the previous week. So that's the that's kind of part number one. Part number two, check this out, and this is wild to me. Refinances were up 118% compared with the same week 1 year prior. So year over year. Now 2 weeks ago on the show, we were talking about how it was up 59% year over year based on that week. And now it's up 118%. So what you see here is like this initial impact. People go, oh, shoot, the gate opened, I'm rushing the door.
Yeah.
But then you also see now the second week into it, we go, oh, people are still like, they're not laggards necessarily, but they didn't get in the first week, but they showed up on the second week in large numbers.
Yeah, because the first week, the rates, we totally saw a huge impact on that. It was really nice. Everything looked really good. And then the second week, well, we started kind of losing that momentum. Rates started increasing.
And I want to make this special point because I know you guys are dealing with a lot of this, with people directly. But I know, in internet land and on YouTube, it's especially easy to come to the conclusion that, well, people shouldn't be refinancing right now. Why on earth would you be refinancing? And we've been talking time and time again where there are people who are in situations, whether it's by their own hand or by circumstances that surround them, they just need to. Yeah. And they need some sort of financial relief, and they might even have a really low first that they just can't hold on to anymore. So whether we like it or not, or you like it or not, people are in situations and they need help and their house is coming to the rescue.
But here it is, Andy. Let me just tell you this. We're doing a $1.4 million here in San Diego. The savings that we're doing for this veteran is $1,200 a month. What can you do with $1,200?
On 1.4 million?
On 1.4 million, we're dropping it by almost a full percent.
The interest rate,
and
okay.
it's $1,210 a month. Less.
Dang.
The other great thing about it with VA, obviously, when you pay your payment, it's in arrears. So, and then we calculate the prepaid interest into their closing costs. So therefore, it looks like you skipped 2 months.
Yeah.
Right.
Yeah.
So when your payment's 11,000 and change, or actually 12,000 and change, you get to put in your pocket at least those $24,000. To go do some type of home improvement, anything like that. Then the other good thing about that is he also has a $14,000 in his escrow account where his property taxes and everything's paid right there. He gets that back.
That's refunded, yeah.
So that's like a mini cash out refinance to help
That's
you pay
crazy.
some of those credit cards that have a higher interest rate. In addition to that, you save $1,210. That's just crazy. I'm sorry to say.
So it's a $1.4 million loan. Is this a VA IRRRL?
Yes, it's a
This
VA
is an
IRRRL.
IRRRL. So this isn't a
an IRRRL.
cash out
No.
situation. We're not paying
No.
off debt. This is strictly the VA IRRRL.
That's correct.
Dang, that's nuts.
Yeah.
Exactly. The clients were super happy.
Well, yeah,
right?
$1,200 a month goes a long way.
I have another one. It's around. Oh
That's
my
crazy.
God! It's like it's in Tennessee, and it's 830, and they're saving about $700.
Wow. That's substantial.
Of course.
So-
So it makes sense, Andy. In some of these cases, if your loan amount's 200, 300, 400, maybe 1,000, it may not make the best sense, but when you're talking about larger loan amounts nowadays, it's going to make a big
Yeah.
Well, okay, and we should talk about this too, though, because I think some of these ones you're talking about, these are people that purchased in the last 24 months,
Yeah,
right?
12 months.
12 months, okay, so 12 or 24
Yeah.
months. The point in saying that is the argument sometimes we hear is like, well, why would someone refinance and reset a 30-year term? Well, they're only 12 months into it, or
Yeah.
maybe 24 months,
Yeah.
and so not only did they buy in the last 24 months, they also bought at that price 24
Correct.
months ago and at the interest rate in that market environment back then. Now that it's dipped down, I did not know that
Yeah.
that you had that 1.4 with 1,200
yeah.
savings a month.
Oh, yeah.
And that other one, what, 830 with
I
$700
mean,
a
we
month?
have several of them. And
That's
it just makes
crazy.
perfect sense. And then here's the other thing. We give them a mortgage accelerator calculator that if they apply the same, what they're saving, the $400 or $500
pay
back
that forward, yeah.
to the principal, we give them right there that, they'll pay off their house in 6 years less
Yeah.
than the 30 years. So we already caught them up. If they purchased a year ago and we put that into effect, Andy, and they're paying it not, 6 years less, well, we're saving 5 years.
Yeah, and especially everything's going on right now with the economy. I haven't spoke to a client that I've called them and said, "Hey, it's time to refinance." No, I don't want to.
No.
I'll wait for the rates to go lower. Like
Wow.
everybody's like, "I'll take anything right now if it's 300,
Yes.
$400. That's money that could be utilized and dispersed elsewhere for their lives right now with everything being so high in cost that
Yeah.
for them any ease that they get from their payments or they're able to save money, to them it's good. And they're like, "Hey,
Yeah.
and then when can I do it again?"
Yeah,
Yeah,
we're
and
doing
so-
FHA streamlines too, and
Yeah,
you can't. The client cannot cover any closing costs, so we credit that back for them.
exactly.
Yeah.
Make it simplify the process so they can truly. We're setting them up for success.
That's
right?
an important part. Let's give that the credit that it's deserved in that
Yeah.
moment, because the FHA Streamline, they cannot come out of pocket with any closing costs for the refinance of the FHA Streamline, right?
No, it's not they can come out of pocket. They can come out of pocket. The thing is, you cannot add it to their loan amount.
You can't add to their
You
loan
can't
amount. Yeah, sorry,
finance
you can't,
it.
like,
It's
roll it in. Right,
Finance
yeah.
it, correct?
Right, got
Like
it.
a VA or a conventional loan, those are things you can do. But when you're doing an FHA Streamline, that is something you cannot do.
Right, but the business solution, though, and this is what I'll make the point, the business solution is having a lender credit for
That's
those
correct.
things so that you can still close the deal, get a lower rate, and then save money.
That's correct.
That's my takeaway.
Yeah, exactly. Mainly, we get the client to come up with their payment or a little higher than their payment to make sure that they're recovering everything.
Yeah.
But their loan amount doesn't increase, which is great about it.
That's awesome.
So I can imagine how many thousands of examples like this there are
Exactly.
in this 118% increase from year over year same week 1 year ago number that's being reported here, because that's evidence of this, whether it's just to save money on the monthly payment because of the IRRRL or the Streamline. FHA Streamline, or it's cash out and all that kind of stuff. Clearly, there's been a market response by homeowners, and we're seeing that broadly, not just here.
Correct.
What I find that's just super surprising and alarming is that just with the Fed saying, "Hey, we're going to bring rates down," or possibly bring rates down, we're up 118%. So you can take it that whenever the Fed says, "Hey, rates are officially going to be coming down," what's that number going to look like when
Exactly.
everybody actually hears rates are down, rates are down, rates are down? Even though we know the market will price it in, beforehand, but that number is going to go out the roof because of all the people that are just waiting for them to hear the rates
Exactly.
just drop boom.
I
And
mean-
this is just on the hype that it's going to get brought down. In,
I mean, Brian always
September.
said Uncle Powell is the most influential man in the world,
Jesus
bro.
Christ, he
You know?
speaks and the markets listen.
Exactly.
I think there's going to be more of this coming in the fall. Just, again, I think this is just a prelude to what's
Yeah.
to come. We haven't finished this specific
Yeah.
week yet, but when this week is all closed, out as far as the business is concerned, I know we're going to have more open escrows because
Yeah.
I kind of overhear you guys talking to more people and
course.
they're sending the paperwork in, you're sending the links out to upload their documents to the portal. Like, I just know what's happening, so
Yeah.
we'll have to come back to this one
Yeah.
full circle next show.
Here's another thing that a lot of times we don't see in all of this, right? This is great information. The thing is, our market is so volatile. It changes so quickly because of everything that we got going on around the world, right?
Yeah.
I mean, last week we saw consumer spending was stronger than expected.
Was stronger than yeah.
So what people are saying is, hey, I'm still getting my 9-to-5 job, and I still have enough money to go buy whatever I need to buy, and overspend. Right. And so the government now is probably teeter-totting whether or not if they're going to even cut rates in September because of that.
Because some of that's necessities. Like there's just necessities built into that. And I'm not saying like retail sales, all necessities, but there's things like I need retail wise, I need to buy clothes for my kids. And some of that is attributed to back to school. But again, we have the same back to school data from August of last year and August of the year before. So if we're going to claim that there's a back to school bump, it might just be that. But there's also the necessities of daily living that people have to have.
But that's not how they're portraying
I know,
this to be.
I
You
know.
know what I mean? So here I go. Not that I'm rebuttaling this, but it's just like, it's just unfair, right? Because now, first they got us all excited. The market picked up on that. Now consumer spending's higher. Now it's retracting from that.
Yeah.
And so now we're all in a pause and a standstill to see, well, what's going to happen tomorrow?
Yeah.
Because it's that volatile.
They're trapped.
Like,
I mean,
it's what it is.
So day by day.
Still,
Day by day.
the
Thank
Fed-
you. Welcome
hey,
to our
the Fed's still
lending
trapped.
industry.
Welcome to episode 82. Guess what? The Fed's
That's
still
it.
stuck.
Yeah.
Haven't we been waiting on the Fed for how long now?
Oh my gosh, we've been waiting on the Fed since like 2019.
But what I do like about this is, it's bringing relief to people. It's bringing them hope.
Yeah.
People who are really struggling, even that 1,200, listen,
That's
they
a
make
lot of
great
money.
income, but they still can use that additional income. They were so happy when they're going to skip the 2 months and they're going to get their escrow. They were like, bro, that's going to allow us to do. And I'm like, you guys make excellent income.
And it's right around it's right around this time of the year. We're turning into the fall. People are starting to get their eyes towards their fall activities and
Halloween.
the holidays. And I'm telling you, even Brian's bringing up if people saving $300 or $400 a month. That's a lot of money, man. That's
It
not
is.
like we can't just like throw $300 and be like, oh, whatever.
Well, depending on what their income is, $300-$400 could be a lot of that. Extra bills to be paid or groceries and stuff. So that can go a long
And then
way
you
for
got
them.
the 2 months, Brian. So if your average mortgage payment right now in San Diego is $36,000 to $4,000, that puts another $8,000 in your pocket to go do some of these things, pay off one of those credit cards. In addition to that, you start saving $300 to $400 a month.
Yeah.
That's not bad. Yeah. And some people would then understand if you even have that money, throw it back to your principal. It's like you got a free refi.
Yeah.
So it
That's
just
right.
depends how you look at it.
Yeah, good point.
What you do with that.
And I'm glad you brought up the mortgage accelerator calculator. I know that's something it's not necessarily unique to us, but it kind of is unique to us because I don't actually know a lot of other people talk about this on how to use that same monthly payment but apply it towards your principal balance and pay it off early. We're actually showing people how to pay out your loan off early. That's
correct. I'm not the owner of the bank. I want you to go and pay off your property, right? Go and invest in
I don't
yourself.
know that bank.
I'm not the owner.
Next episode, we own a bank. No, just kidding.